Live from Bloomberg's world headquarters in New York, I'm Katie Greifeld. Welcome to Bloomberg Crypto, a look at the people, transactions, and technology shaping the world of decentralized finance. In just a moment, SEC Commissioner Hester Peirce will join us for an exclusive interview to discuss the regulator's stance on crypto, private assets, and tokenization. We'll also hear from Bloomberg Opinion's Allison Schrager as crypto takes a step closer to being in your 401k. And Bullish is set to start trading tomorrow. We discuss the crypto trading platform backed by Peter Thiel. All that ahead, but first, here's a snapshot of what the crypto market looks like at this moment. We're keeping an eye on Bitcoin itself, touching all-time highs this week, trading near $120,000 a coin, adding another 1% to its rally. You also have Ether surging. This is where a lot of the action has been, topping 4,400, sitting right now near its highest level since 2021. Now, spot Ether ETFs collectively pulled in a little over $1 billion yesterday, so investors really putting their money behind Ether's rally. I also want to check in on Circle, too, though, climbing after its first earnings report as a public company. Revenue climbed 53% last quarter alone, really boosting confidence on Wall Street. You can see that confidence right now with a 6.3% rally in Circle shares. Meanwhile, another big story we've been covering is the executive order that President Trump signed last week that could pave the way for 401k accounts to invest in crypto. Bloomberg spoke with SEC Chairman Paul Atkins back in July about the possibility of private markets in retirement accounts. Here's what he had to say.
We've heard a lot of input from both the investors who want access to the private markets and to those sorts of products, and obviously from the people who are producing the products who are about to meet that demand. But we have to do it carefully, I think, because of course the private markets are a lot different than the public markets.
And that was Paul Atkins before President Trump signed that executive order. And now that it has been signed, I'm pleased to say, we're joined now by SEC Commissioner Hester Peirce to discuss this topic and much more. Commissioner, great to have you with us. Let's talk a little bit about that EO. So it instructs the Department of Labor and the SEC to adjust their rules and regulations to allow those retirement accounts to invest in private assets, to invest in crypto, or at least to allow it. How will the SEC approach this? What does that checklist look like?
Katie, it's great to be here. I think we've already started that process of opening the private markets to retail and thinking about ways that we can get them access in a way that's diversified, professionally managed, and consistent with their investing timeframes. And so I think we'll just continue with that work.
Appreciate that context. So as we continue on and as you approach this, talk us through some of the potential risks that you're thinking about, because certainly a lot of folks on Wall Street and elsewhere have been anticipating these rule changes, but there's also a lot of concern, too, about putting what are risky assets in retirement accounts.
Yes, I mean, I think those are legitimate concerns. What we've seen, of course, is that the public markets are dominated by several large companies, and also companies are waiting longer to go public. And so we're looking for a way for retail to get earlier access to the growth of companies. And so that's really the goal of it. But of course, you want to do it in a way that makes sure that we're not just using retail as a dumping ground for bad assets. So I think it's making sure, again, that there's professional management, that it's done in a way that's careful, and that we're paying attention to the risks associated with it.
A conversation I've been having around this topic is about how this isn't as simple as switching a light switch necessarily, that you're not going to see private assets, you're not going to see crypto in retirement accounts overnight. You said that you've already started this process on your end. You're working through that checklist. What do you see as the timeline here?
Well, I mean, I think even already we have loosened. SEC made restrictions that really were not based in law on the percentage of private assets that could be available in retail accounts, in funds that are available to retail investors. So I think that process has begun. We have a new head of our Division of Investment Management, and he's working closely with the staff and working also with people who have been thinking about how to do this in the private sector. So it's a combination of those things.
All right. Well, appreciate the update there. Hope to keep talking about that. But I do want to move on, and I want to talk about tokenization. That obviously another big hot topic of the moment. And when we're talking about everyday investors getting involved with tokenization, what are some of the risks in your view that could potentially come about?
Well, I think there has been a lot of interest in tokenizing securities and other real-world assets, and that's something that really opened up after the SEC changed its perspective on crypto. So we're seeing a lot of interest from traditional financial firms and native crypto firms. And there are different approaches that are being taken to tokenizing. So we will work with people. We're willing to work with people who are taking different approaches. But it's really important that people be very careful about disclosing what the nature of the asset is when you tokenize something. It's still a security. If you're tokenizing a security, it may be a security with different characteristics, and that's something that needs to be conveyed to investors. And it's also important to be aware of sometimes their trading restrictions or their restrictions on who can access particular types of securities. And so that's something people have to pay attention to.
And that's a point that you've made in the past, that tokenized securities are still securities. You do have some firms, I'm thinking of Robinhood, for example, rolling out tokenized stock trading. I believe that's taken hold in Europe. So, I mean, do you see that as a potential area where you could run into some of these confrontations over firms trying to really regulate and innovate and introduce measures such as that, but potentially coming up against some of these regulations that you're putting in place?
Well, without talking about any particular firm's approach, I think the bottom line is that we encourage firms to come in and talk to us. We expect that there will be some different approaches taken to tokenizing, and we're looking forward to working with folks to try those different models out and see what the market's like, and see whether or not tokenization of equity securities takes hold. I mean, that really will ultimately be up to the market. But what our message is that we're willing to work through different potential models with people.
Well, you said something interesting there. If tokenized equities take hold, and it's a good reminder that this is very nascent, that we're only just seeing the first few attempts at this come about. But should these tokenized real-world assets, should tokenized equities really take off, should we expect a formal pilot program from the SEC for tokenized securities?
I think the pilot program, again, is more likely to look like multiple pilots with different people coming in and trying to do this in different ways. And again, we're not trying to be the picker of winners and losers, but letting the market decide. So really, we expect that there will be multiple options.
I do also want to talk about how you interact with some of the other regulatory bodies in D.C. For a lot of folks, it's kind of like alphabet soup. You have the SEC. You also have the CFTC. And I'm wondering how you work with the CFTC on crypto right now, if at all. What does that relationship look like?
We have a good relationship with the CFTC. We've worked with them. I personally have worked with the CFTC over the years on a number of issues, including security-based swaps. And so right now, both agencies are coming off the President's Working Group report recommendations. We're both trying to implement those recommendations, the ones that we can start already, absent market structure legislation. And so we're coordinating with the CFTC on moving forward on those recommendations.
Well, to that point, one of the recommendations was that crypto exchanges and other crypto entities that are registered with the SEC, that they should have to pay transaction fees the same way that traditional brokerages do, for example. Do you agree with that?
I certainly understand that we need to have the fees fall on the people who are benefiting from the revenue of the fees. So I think that as the markets change, those changes should be reflected in fee revenue.
And Commissioner, you also brought up market structure. We know that crypto market structure bill is working its way through. The sense seems to be on the street that it faces a much tougher go-ahead than the stablecoin bill, for example. I would love to hear your thoughts there.
Well, I don't prognosticate about legislation any more than I do about where the markets might go in terms of which models of tokenization they might embrace. But I do think that the work has been really impressive on the part of the House, and the Senate is now looking at these issues. It's a very complicated piece of legislation to work out, but I think important, and we're happy to work with people in both the House and the Senate on trying to get it to the place where it will help to guide the shaping of the industry.
And just game planning here. Let's say that Congress isn't able to finish this market structure bill by November. What would that mean for the SEC and your approach to regulation?
I think one thing that's important to underscore is that we at the SEC are not waiting for legislation to work. We have a lot of work that we can do under the existing authority that we have, and we think that the President's Working Group report urged us to take those steps. And so we've been working since January on providing guidance about where the securities laws apply, and then where they do apply, helping firms to navigate those rules. And so that's something that we are hard at work on. We're working on rulemaking, and we think that what we do will be consistent with whatever market structure legislation comes out.
And Commissioner, I do want to talk a little bit about Project Crypto. I know that that's put together to help implement the Presidential Working Group's recommendations. How is that project going right now? What does that look like?
I mean, it's going very well. We're working very collaboratively with staff all across the Crypto Task Force is working collaboratively with staff across the building at the SEC. We are meeting with industry and with other interested parties. We're taking written comments as well, and we're putting that together into a package of reforms. As I said, we've already gotten some guidance out the door, but we are hoping to get some proposed rulemaking out the door as well.
Well, Commissioner, we really appreciate you taking the time to speak with us today. That is SEC Commissioner Hester Peirce. Now, coming up next on Bloomberg Crypto, we'll be speaking with Bloomberg Opinion's Allison Schrager in more detail about 401ks and crypto. But let's take a quick check on shares of BitMine. It has filed for a $20 billion equity offering to purchase Ether for its stockpile. This comes as Ether prices climb in a big way, trading near the highest level since 2021. We'll dig into all of that and more next. This is Bloomberg Crypto.
I see the argument for, hey, let's open up the space. I cannot even begin to imagine what the implementation of that looks like because, defined contribution plan sponsors, they're fiduciaries. So it's on them to go do the due diligence, to put the menu of options together for the investors to figure out what makes sense. So it's a huge hurdle from idea to implementation.
That was Cynthia Murphy with TMX Vetify on ETF IQ speaking to me and the crew yesterday. And even if all the hurdles can be cleared for alternative access in retirement accounts, not everyone is on board. To some, it's like the old adage, just because you can doesn't mean you should. That is the view of Bloomberg opinion columnist Allison Trager. She's sitting next to me on set. Great to see you in person, Allison.
Great to be here.
So let's talk about that. Implementation aside and all the headaches that could bring, why maybe should this take some pause on the part of those fiduciaries about whether or not to put it into these retirement accounts?
Well, I mean, it's arguable, but in my view, the reason why you want certain assets in a 401k is it gets people closer to their retirement goals, but doesn't expose them to undue risk. And that risk-return trade-off, it's there, and it's supposed to be the fiduciary's duty to balance that out. And the question is what is crypto adding here? I mean, the boosters of it have only seen it go up, but it's a super risky asset. And if you look at its history, it just appears to have a very high beta. So the question is, would you give people the option of just adding, say, a lot of leverage to their stock portfolio in a 401k? Probably not. So, I mean, I think the big question here is whether or not this is going to qualify as a default. It's like 85% of people just stay in whatever the default investment is. And I think, plan sponsors can sort of legitimately say, all right, we're giving people this option, but it's buried in the investment menu options. Most people won't even know it's there, won't even recognize it. But I think when they start offering it as a default investment, when people are automatically invested in it, that's going to be a much bigger hurdle for them.
So, for example, when you work at a corporation that has a 401k plan and it's included in perhaps a target date fund that everyone is cycled into. That's interesting. I guess if it's not, then the folks who are investing, who are adding it to their 401k, they really mean it.
Yeah, and I think that's more defendable is, all right, this person has seeked this out. They went through the investment menu option. They feel very strongly they want crypto in their 401k. I wouldn't personally advise that, but you know, you do you. That's part of the full 401k world.
Yeah.
So I mean, I guess that's more defendable. And also in terms of taking on any sort of fiduciary liability, they could also argue that.
Allison, I wonder what you make of the argument that a lot of the growth, a lot of the innovation, it isn't captured by the U.S. public markets anymore, particularly when we're talking about private companies, for example. A lot of things that I hear in argument of why you should be able to invest in your 401k is that the most exciting companies aren't going public anymore, and you're missing out on really long-term gains. What do you make of that?
Well, the question is excitement supposed to be in your 401k? I mean, the justification, I think, for this, which I think is also poor, is, you know, defined benefit plans have gone heavily into private assets, in part because they argue, well, you're not touching this money for years, and there's this illiquidity premium. But we're already seeing a lot of defined benefit plans not getting their money back or having to turn to secondary market. And, you know, it's much riskier. These aren't assets that have market pricing. And already, you know, if you're running a 401k, a defined benefit plan, argue you know better. And a lot of them aren't doing well. So I think there's also a question of why would we allow this for the 401k market when you have probably some of the least sophisticated investors starting to invest in something that's the least transparent and the least well regulated.
And maybe this is a curveball, but I cover ETFs primarily. That's my home base. And it is striking to me that we're entering a world where we're going to have private assets, we're going to have crypto in your 401k before we see ETFs be available to get into that system.
Yeah, I mean, I think it's just there's a lot of appetite for this administration to give people more financial risk. And I think that might be part of the justification, is that there's these assets. And honestly, in the last couple of decades, they only seem to have gone up. And I think that's where we always fall into, well, if they only go up, everyone should have access to them. But I think we all know, and if it's something, nothing always goes up. And in fact, if it has extra returns, it probably also means more risk.
That's true. Allison, great to get your perspective on things. Certainly an interesting world that we inhabit. That is Bloomberg opinion columnist Allison Schrager. Now next, we'll speak about the upcoming Bullish IPO. And to access all the latest data and news on crypto, check out CRYP Go on the Bloomberg terminal. This is Bloomberg Crypto.
Bitcoin is digital gold. It's going to accelerate the migration of capital from physical gold to digital gold. You know, Bitcoin lives in cyberspace. No tariffs in cyberspace.
That was Strategy founder and CEO Michael Saylor speaking to me last week. Strategy bought even more Bitcoin again this past week, as Michael Saylor is wont to do. And the number of publicly traded crypto companies has been increasing almost weekly this summer. One set to IPO this week is Bullish. That is the owner of crypto publication CoinDesk. Bloomberg Equity Capital Markets reporter Anthony Hughes is on the story, and he joins us now on set. So talk to us about this IPO. It's been a pretty good summer for IPOs in general, and this one in particular looks to be facing some pretty hefty demand.
Yes, there seems to be a lot of enthusiasm for this IPO. It's pricing tonight. We reported earlier today that the offering is more than 20 times oversubscribed, and it's going to price above the range, and that range has already been revised up. So Bullish is looking to raise around $900 million, which is an interesting number given that back in 21-22, the company tried to do a SPAC merger, which was going to value the company at $9 billion, which is actually a lot more than what we're talking about here. But that process would have allowed them to raise around $900 million as well. So, you know, it's interesting that the company is going public at a lower valuation here. But as we've seen with IPOs, recent IPOs such as Circle and Figma, there's been some large appreciation in share prices once these companies have gone public, and with Coinbase, which is a with a market cap of 80 billion, and Circle with a market cap around 40 billion, and we've got Bullish here coming around 5, but probably that's a good chance of expanding here. So you know, people see some opportunity.
Well, you make an important point about the reception that we've seen. Using Circle as an example, it's up something close to 430% since its IPO. I have to imagine that the folks over at the Bullish C-suite are hoping for something similar.
Yes, well, the businesses are a little different. I mean, Bullish is not so much focused on stablecoins specifically, but it has a crypto exchange which has been growing its market share substantially in recent years after starting fairly recently in 21. So people will be looking, how that compares with, say, Coinbase, which is much larger and really dominates the exchange market share in the US, certainly. Obviously, Bullish also owns CoinDesk and also owns a lot of Bitcoin as well. So there's a few different ways to look at this business, but there's a lot of enthusiasm, and whether it's justified longer term is obviously an open question. But certainly, looking this week is going to be a lot of demand by the looks of it.
Yeah, absolutely. And you cover the equity capital markets for us. That increasingly means you cover crypto. When you take a look at the rest of this year, what does the pipeline look like for more of these crypto companies entering the public markets?
Well, it's interesting. I think we're seeing that there's going to be a lot of IPOs after Labor Day, a substantial number of IPOs, and a good number of them will be crypto. They won't be all crypto, and I think there's other areas of the market where there's a lot of enthusiasm. But people generally want to invest in growth, and crypto and AI and areas such as defence and aerospace have been where a lot of the action has been. So, companies that are outside those industries might not find as much demand, but certainly. At the moment, crypto, there's a lot of momentum, and partly that's because crypto's kind of been moved more into the mainstream, more regulated businesses. This is certainly Bullish is selling itself as helping institutions increase their exposure to crypto, and that's obviously a theme that they think is a very strong one going forward, because really up to this date you could argue that crypto has very much been driven more by individual investors and retail investors, but that the institutional interest is growing, and that's a big part of the thesis behind Bullish.
Well, it'll be fascinating to see how the pricing eventually settles. Anthony, really appreciate your reporting. That is Anthony Hughes with Bloomberg News. That does it for Bloomberg Crypto. We'll see you again next week. This is Bloomberg.